Good morning, people. It's 7:30 in the morning UK time. Up early, shit the bed. And if you're wanting to learn to trade stocks, or you're taking an interest in wanting to learn how to trade the stock market, or if you're already trading the stock market, then we're going to review today YALA Group Limited, which is a stock that we've been discussing over the past week. It's a stock that's been on our watch list for a number of months, and it will stay in our watch list for a number of months as we trade this stock between its channels. And as you can clearly see on the screen at the moment, we're looking at the weekly time frame with moving average and an anchored volume weighted average price for the financial year and the midway point of the financial year. I'm just going to get rid of that. And we've also got the RSI. RSI is not something that we use regularly. We just use it to reference quite briefly to see sort of potentially where if the stock's being exhausted of buyers or sellers in the direction that it's heading. So without further ado, let's have a look at yesterday's events. Okay. So a couple of days ago, we released a video content on, let me just lock this in place, on YALA and the direction in which it was going. Now, as I say, we've been monitoring this stock for a good number of weeks, and we started accumulating our shares in and around this price area, or price zone, whatever you want to call it. And obviously each time it hit this key area of interest, around $3.90, we decided to add to our position to eventually, once it broke above the 50-day moving average and the midway point of the financial year and the full financial year's anchored volume weighted average price, it's at that point that the short sellers had to get out of position, creating this large green candle, a bullish candle, which you guys call, and continue the momentum all the way up. So it has exhausted, where investors started to take a bit of money off the table. And as I said in the previous video, we did take money off the table because we knew, or had a very good idea, that this was going to happen. And the reason we knew that is because we're in a brand new key area of interest, or a price zone. This area will now be seen as support or cheap price. This area will be seen as resistance or an expensive price. The fair value at the moment is going to be sort of around this area until we update our research files. And as you can clearly see, volume has actually been picking up in this area over the past couple of months. So in and around this area back to January 24, volume is quite high, and that's why you can see a huge decline in price. Sellers basically potentially holding stock there, or more in the long run, investors who are holding this stock, right, keep the stock in their portfolio, and short sellers borrow that stock and they sell that stock back to the market, rebuying it down here and taking the profit difference between $5.40 and $5. So that's why you probably see that, and that's why in the past you probably see that back in January 2004 there's heavy volume dated all the way back to January. That's because investors have actually kept hold of their stock for the long run. And when I say long run, we're talking potentially years down the line, that the long-term investors might decide to keep hold of this stock and sell it, 10 years down the line, maybe, when it potentially reaches huge highs. But as I say, we're talking today about trading more. It's long term, but not as long, shall we say. So sometimes we'll hold stock depending on its ATR reports, depending on the research that we've made. But at this present time, we made some nice gains all the way from $3.90 all the way up to around $5.20. To which point we took some profit off the table. We still are holding stock, and all we're going to do is this is a long position which we've set up. So as you can clearly see right now, a long position is risking 3% to make 12% as it moves into this area. So what we're predicting is as this stock declines back sort of towards this anchored volume weighted average price, we're hoping it doesn't, but if it does, we will keep adding to our position and moving our stop loss down into sort of this area, where we hopefully we'll see investors, smart investors, come straight back in again, see the prices being cheap in the new price zone, and then we'll push this stock all the way back up again. Potentially, in fact, I think what will probably happen is it'll be sort of around this area for the next couple of days, maybe a week or two, to which point, once it breaks above this area, it's liquid. What we mean by that is there's heavy traffic of buyers and sellers in this area battling for position. Once it gets above here, there's nothing really there to stop this stock going up to the next area of traffic, which is around $5.80. But obviously, what we will use is the earnings reports, the earnings per share, price to earnings, net cash, free cash flow, and the current ratio of the stock. It's in our portfolio for a very good reason, and that reason being is it's a well-run company. It's got plenty of money. What I mean by that is just trying to keep it really short and sweet. Let's go to ratios. That's okay. And we want to look at current ratio. Okay, current ratio. The current ratio is used to measure a company's short-term liquidity. A low number indicates that a company will have trouble paying its upcoming liabilities. Keeping it simple, this company YALA has 6 times more money in the bank than its debt in relation to assets to liabilities. So what we're saying is this company has more than enough bang in its bank to be able to pay back any debts if it was to fall into arrears or it hits a bit of a stumbling block. So we're not too concerned about this company going bust at any time soon. And we look at its return on equity, 21%, return on assets, 10%. Return on equity is a good one to try and get your head around. Return on equity is a profit metric that shows how efficient the company is at using its equity to generate profits. Equity is seen as shareholders' investments. So when you put your money into this stock, you're classed as equity. Okay, so this company is using your money to be able to gain 21% more on top, which again, it is obviously really good. So with that being said, I don't want to go on too much about this stock because I need to discuss what happened with GMGI yesterday in a moment or two. But what we're saying is for training purposes, if you're wanting to learn to trade, study this sort of stock and its behaviour and look at the likes of average true range, okay, which measures market volatility by calculating the average range between high and low prices over a set period. A higher ATR means it's volatile, a lower ATR indicates a stable market. It doesn't predict direction, only price movement intensity. And the way you can use ATR, and I'll discuss other indicators in the next video, but the way you could use ATR is you can say, okay, well, if the ATR is at this moment in time 30 cents, then set your stop loss below 30 cents so that you don't get stopped off. So if the ATR on a weekly period, let's just get rid of this a minute. ATR, okay, ATR weekly, right, so at this moment in time, over the last 13 weeks, the ATR is 33 cents. So you could say, okay, well, if I bought this stock next week, I will set my stop loss 33 cents lower or 10% more, okay, than 33 cents. So if you do 33 cents, okay, and you add on 10%, you're going to set your stop loss 36 cents below your entry point to this stock, meaning you've got an extra 3 cents cover just in case it does hit its average, which it's very likely it could do. I'm not saying it could go from, let's say for argument's sake, it opened next week at, let's keep it simple, $5, right? It's not going to go down to $4.70 or $4.67. It could go to $4.90 and then up to $5.23. That's still a 33 cents move, average true range. But what we're saying is if you do set our stop loss in that area, it's very unlikely you're going to get stopped out. You're going to stay into the stock and you're going to ride this trend all the way up to $5.60. But do your own research. Anyway, that's enough for this video. I'll see you in the next one.